Hey, what's going on, guys? Today we're going to talk about in terms of four beginner day trading mistakes to avoid. Day trading is extremely hard, and there are a lot of mistakes that's being done by individual traders, especially retail traders who are trading with small accounts. So today we're going to discuss in terms of four the biggest mistakes which a trader or beginner day trader actually does. So moving on, number one is no strategy, right? So first of all, you want to go and decide, hey, you know what type of financial instrument would you like to trade? Do you want to trade stocks? Do you want to trade currencies? Do you want to trade cryptos, right? So when you go on to any kind of financial instruments, if you see, there's a lot of stuff you can trade, right? I mean, over here you can see a whole bunch of stocks. Then you can also trade futures. If you want to trade futures, you can trade Forex, right? That's currency trading. You can even trade cryptos, right? The Bitcoins, Ethereums, and so on. So you want to go and decide in terms of trading, what instrument you really want to trade, right? In terms of if you did decide end up trading, whether it's stocks, currencies, or cryptos, you have to see what kind of setups would you like to trade, right? Do you want to trade breakout patterns? Do you want to trade pullback patterns? Do you want to trade range trading? Right? The other thing I want to talk about is in terms of how much risk to take on, depending on your strategy, depending on your uh, risk levels in terms of your account size and so on. How much risk do you really want to take on a trade? That's something which we're going to talk about up next. The other thing is in terms of taking profits too quick. As humans, we really, when you see green on the screen, our tendency is always to go and take that profit quickly. Whereas if there is any kind of losses, we tend to sit on those losses, right? And we let the account bleed and bleed and bleed. And last but not the least, in terms of changing time frames. So, I mean, we might have taken a trade for a day trade, but because now the trade has gone against us, that day trade becomes a swing trade. Swing trade means you're holding the stock for 1 day, 2 day, 3 days, or maybe even 1 month, right? So you've got to have a strategy to determine, at what time you want to get in and what price you want to get out. The other thing is in terms of being undercapitalized. Now, this is a big one in terms of for beginner traders. If you're using a small account, shows a percentage. You know what? If you were to go and lose, say 5%, right? If you were to go and lose 5%, uh, you got to break even 5.26. So what do I mean by uh, losing 5%? So let's say if you have $100, and if you were to lose 5% of it, which means now you're at $95. So for you to break back even at 100, your $95 has to make 5.26%, right? Now, if you keep on going, taking a look at, how much risk you're losing. So let's say, you are at 50%. Let's say you have $100 and you lost 50% of it. Now you're at $50. Now, guess what? How much you will have to make back to break even? You'll have to make 100% of the money to break back. So 100 becomes 50, and you need to make 100% of the $50 to break back even at $100. So if you're undercapitalized, you don't have that that's the whole reason why when you are undercapitalized, you talk about taking on lesser risk, maybe 0.5% of your account, 1% of your account, right? Because if you go on to take bigger risk, your account size becomes smaller. And in terms of the percentage that you need to go break even, becomes higher and higher, right? After 50%, if you see, hey, you know what? If you lost 90% of your account, you need to make back 900%. Now, how often are you going to have a trade which makes you 900%? Pretty much never. Right. So you want to capitalize a well-capitalized account, depending on what you're trading, whether it's stocks, equities, uh, currencies, or cryptos. Right. Third is revenge trading. Right now, what revenge trading really happens when, let's say you took on a trade and you took a big loss. Right. You maybe took a 20%, 30% loss. The trade just went against you so quick, so fast, you couldn't really recover. Or you know what, you had a loss and it just kept on bleeding, bleeding, bleeding. And as you talked about, you had no strategy, right? So you go from being a day trading that stock, becoming a swing trading because now it has gone against you, and you keep on holding on to that stock till your account has gone down 50%, right? Now, what happens next? Uh, Most commonly, the most common decisions or most sensible decision is to sit back and reevaluate what went wrong. Instead, what really happens is people become angry, right? And they become determined to, how can I even make this kind of a loss? So what they try to do is, After one loss, they double up their position size, trying to make back what they lost and to make a bit more. Now, guess what happens? I mean, if you are trading on with no strategy and you also go on to do revenge trading on a small account, it's a very easy and is also a recipe for a good blow up in your account. Right? So your account is gonna blow up, you'll have no money left to trade. Right? So never do a revenge trading. And then number four is trading with money you can't afford to lose. Right? If you need that money in your trading account, if you need that money to live on, don't trade. Right? If you want to day trade, then you need to have enough money that you are willing to lose, right? The reason being is when we are trading stocks, equities, currencies, cryptos, and so on, we are not only trading that particular stock or financial instrument. What we are trading is also our dreams, our hopes. So dreams, a hope, something like, you know what, I want to sit and trade on the beach. I want to have a Lamborghini, XYZ, right? So that's what you're trading, right? Trading a stock is just part of you reaching that particular dream or your hope, right? So always go and trade with money that you can afford to lose, and always have the money that you for you to go and meet your essential day-to-day living. Quickly, I want to recap the most common trading day trading mistakes to avoid by beginners. Number one is having no strategy. So build a strategy, get a mentor if you don't have a strategy. Uh, Undercapitalized, depending on what kind of financial instrument you're trading. Make sure you are capitalized well so that if the account does have a setback, you can still make up for it. Revenge trading, where you know what you are trading based on emotions rather than strategy, and trading with money you can't afford to lose. So, guys, if you like the video, do like and subscribe. I'm gonna make more videos for you guys. Have a good one.